Namaste, good morning. Welcome to this session where our primary intention is to complete all the assessment process. Well, we have divided the whole assessment process into three broad areas. First is assessment. Next set of discussion is post-assessment scenario. What happens after assessment, that will go up to penalties. And the third aspect is the new faceless appeals and assessment. So the 3 days split is like that. That's how I want to take and walk forward. I start with filing of returns and move forward today till section 153B or so. We start with filing of returns and move forward. Well, all these processes after the year is over, after a particular year is over, after the financial year is over, what happens? That's what is the beginning of this part of the story. So we have so far seen during the financial year what is allowed, what is disallowed, how, etc. After 31st March 21, technically, what is the process that the assessee and the department goes through? The assessee's process is only one, and after that he becomes more of a responder than of an initiator. The assessee, the process for the assessee is just only one: file your returns. After that, the assessee is going to be a responder. If at all their question is being asked, he needs to respond to that question. So he is more of a responder than of an initiator, than he going and telling anything. So that is the focus. The focus shift to the income tax officers or the department to conduct various aspects, right? So we also travel in the same manner. We also start with filing of returns. We also start with filing of returns. Section 139 makes it mandatory for filing of returns. Though the section heading is mandatory filing of returns. Though the section heading is mandatory filing of returns, it is only speaking about voluntary compliance. Though you see the section as mandatory filing of returns, actually it speaks about voluntary compliance with the returns. The first section answers three questions for us. Who should file, when should they file, and how should they file? Repeating, Section 139 answers us 3 questions. Who should file? When they should file? And how they should file. The third question is not an examination or questionable. It is purely practical. Which income tax form they should use depends upon the nature of income. If you have PGBP, if you have only salary and house property, you also have capital gains, you are subjected to audit, etc. So do not worry about the third question, not an examination oriented question, how it should be filed. So the first 2 questions needs to be answered. Who should file return? Okay. In the case of individuals and HUF, if the gross total income, I'm repeating, the law uses the terminology where income before providing deduction under Chapter 6A. So we all know if the gross total income exceeds basic exemption limit, if the gross total income exceeds basic exemption limit, you need to file your return. If the gross total income, and also before providing for any exemption under section 54, any of the 54. Okay, suppose I have 10 lakhs worth of capital gain this year. I sold a property, got 10 lakhs capital gain. I went and invested in specified bonds. The whole 10 lakhs I went and invested in specified bonds. I don't have any other income. I don't have any other income. Should I file my returns? The answer is no. The answer is no. I'm sorry, the answer is yes. The answer is yes. If my gross total income before providing section 54 exceeds the basic exemption limit. I had a capital gain of 10 lakhs. Whole 10 lakhs is exempt. I'm not liable to pay any tax. Accepted. Whole 10 lakhs is exempt. I'm not liable to pay any tax. But before claiming exemption, my income was more than 250 basic exemption limit. So I am liable to file my return. So in the case of individuals and HUF, gross total income before claiming 54. If it exceeds basic exemption limit, you need to file return. Apart from this, if an individual has any asset located outside India, if an individual has any asset located outside India, if an individual, okay, is a signatory of a bank account outside India, in the case of individuals and HUF, you should file your return of income, okay, if the gross total income exceeds the specified basic exemption limit, gross total income before providing section 54. And irrespective of your gross total income, if you have an asset outside India, file income tax return. You are an ROR who has an asset outside India, or you are an ROR signatory of a bank account outside India. In these cases, file your returns. Mandatorily file your returns if you are an individual. If you are undertaking a foreign trip also, you need to file. Okay. where the individual is the beneficial owner of asset outside India, individual is a signatory of an account outside India, where he is spending for foreign tour, foreign currency, foreign travel, either for the individual or for anybody in excess of 2 lakhs in the financial year. Once more, where he is spending for foreign travel in excess of 2 lakhs, or if the electricity bill, that is not only for individual, for everybody, exceeds 1 lakh in an year. If your electricity bill, okay, this is part A. In the case of firm and companies, in the case of a firm, partnership firm and company, irrespective of their level of income, they need to file. If you are incorporated but not wound up, if you are incorporated but not wound up, you have to file your income tax returns. Okay, okay, right? So mandatory filing of income tax return. It is, though the heading is mandatory, it is voluntary compliance. You yourself going and filing. Who should file? When return needs to be filed? When is that you have to file your return of income? If books are subject to audit under this law or any other law. If books are subject to audit under this law or any other law, 31st October. If books are subject to audit under this law or any other law, 31st October, it's an amendment. Till last year, it was 30th September. Partner of a firm and the firm is subjected to audit. Partner of a firm and the firm is subjected to audit. Why I am saying this? Because unless the book profits are known, the remuneration cannot be fixed or cannot be determined. When will book profits be known? Unless the audit is completed, book profits will not be known. So, partner of a firm which is subjected to audit. Partner of a firm which is subjected to audit is also 31st October. All other cases 31st July, except transfer pricing cases, which is 30th November. Once more repeating. Where audit is mandatory under this law or any other law, 31st October. Partner of a firm in which is mandatorily to be audited, 31st October. Any other case, 31st July or 30th November. The CBDT has the power to extend the due dates. The CBDT has the power to extend the due date either partly or wholly. Whole of India, part of India, any particular area, any particular category of assessee, even for one assessee, CBDT can extend. The word partly can boil down to such an extent, even for one assessee, CBDT can extend. CBDT has the power to extend the due date either partly or wholly. Okay. So please understand that returns needs to be, the section 139 talks about only one thing, about filing of returns. Mandatory filing, though the heading is mandatory, voluntary compliance, it answers 3 questions. The third question is not important, first and 2 question. Okay, sir, I need to mandatorily file. Right, I understand. I am an individual who does not have income at all, and I don't fall in any of the special circumstances category. So, I need not file my return. Is my understanding correct? Means the law then goes and comes and tells us, boss, if you have loss also, you should file. If you have loss also, you should file. Because unless you file your return, section 80 read with section 139 subsection P. Unless you file your return, 3 types of losses cannot be carried forward. Business loss, capital loss, owning and maintenance of racehouse loss. There are 5 heads of income. Salaries, there is no possibility of a loss. So, out of the 4 heads of income, house property is excluded and other 3 heads comes here. If you want to carry forward your losses, then you have to mandatorily file your return according to 139 subsection 1. Which means, if you want to carry forward the losses, file your returns before due date. If your loss is falling under business, capital gains, IFOS, in which owning and maintenance of racehorse is the main thing. Of course, if you have house property loss, carry forward it even if returns are not filed within due date. If you have unabsorbed depreciation, you can carry forward it. Return, okay? Where there is loss under business or profession, capital gains, owning and maintenance of racehorse, then the same is allowed to be carried forward only if returns are filed within the due date. Only if returns are filed within the due date. However, loss from house property and unabsorbed depreciation can be carried forward and set off even if return of income is not filed. I need not even write due date. Even if it is not filed, you can carry forward. Remember, you only lose the carry forward benefit and not the set off. Set off is still claimable. So we have these due dates. We call this as a due date and not the last date. We call this as due date and not the last date. What is the last date? 31st March. What is the last date? Means 31st March. 1 year from the end of the previous year. Like that you can understand. Or end of assessment year. 1 year from the end of the previous year or end of assessment year. Whichever words you want, you can put it. That is the last date. A return filed after 31st October but before 31st March. That's the last date. After that, you cannot file. A return filed after 31st October but before 31st March is popularly known as belated return. Belated birthday money. Okay, it is popularly known as belated returns, and it loses some benefits. What are all the benefits? We are very much clear about the benefits. They cannot claim 80I deduction because for claiming 80I you have to file the return within the due date. They cannot carry forward losses. They have to pay interest under section 234A and they have to pay Fees under 234F. Sometimes penalties can be visited to them. So, belated return. Return filed after the date mentioned in 139(1) or notice sent by the people. They are known as belated return, and it should be filed before 31st March. It should be filed before 31st March. Okay, belated return. Return of charitable trust mandatory. Okay, if you want to claim exemption, file it. Political party, same way. Scientific research institution, rural development, all these funds mandatory. I will soon tell you why it is mandatory. Okay, and business trust, we all know before 30th November they themselves has to give a statement to the 30th June or 30th November. Then comes what is popularly known as revised return. I filed a return under 139(1) or 139(4). 139(1) normal return, 139(4) belated return. I filed a return under 139(1) or 139(4) and later found some errors are there in my return. And later found that some errors are there in my return. Can I rectify it? Yes, by filing a revised return. Any errors or omission, intention of law is to make it for errors and omission. We are not using like that, but still, intention of law is to give it for errors and omissions. Any errors and omission in the return filed, either within the due date or after the due date, if you later want to rectify it, yes, you can do it before the end of the last date, that is end of the assessment year. Before the end of the last date, you can rectify it by filing a revised return. Once a revised return is filed, it takes all the characteristics of original return. The original return goes off and only the revised return will stand. Okay, revised return need to be filed within end of the assessment year, will take all the characteristics of original return, replaces the original return in form and content. Today 26 AS gives you all these things. Income which is exempt, bank account details, especially details about credit card, assets above prescribed limit held by the assessee, expenditure beyond the prescribed limit. And other attachments include audit reports, various location of office and partners capital account. If any of these things are not there, I will call your return as a defective return. If any of these things are not there, the department will call it as a revised return. Sorry, defective return, and intimate to you the defect. And intimate to you the defect, and you have to correct the defect within 15 days of such intimation. You have to correct the defect within 15 days of that intimation. Okay, so it can be extended also, that 15 days. So this is about 139. Okay, followed by that is the very popular PAN provisions. Who has to obtain PAN, and those who have to link PAN and Aadhaar, that date keeps on extending. That date keeps on extending. Right from the day you started foundation to final, it is there, and you become chartered accountant, and further also it is going to be there. Okay, so quoting of PAN is mandatory in some transactions, and wherever you are unable to quote PAN, quote Aadhaar. Wherever you are unable to quote interchangeability of PAN and Aadhaar, this is how it is said, but you cannot quote PAN wherever Aadhaar needs to be quoted. Though it is the section heading is like that, or the provision heading is like that, but it is the reverse way only. Wherever PAN needs to be quoted, you can quote Aadhaar. Can I quote PAN wherever Aadhaar needs to be quoted? No. Wherever PAN needs to be mentioned or quoted, assessee can quote Aadhaar. And once Aadhaar is quoted, the assessing officer will understand you don't have a PAN and he will allot you a PAN. However, where Aadhaar is provided, AO has to allot PAN to the assessee on the assumption Aadhaar has been quoted because assessee does not have the PAN. You need not make an application for PAN. AO himself will give you PAN. Okay, and this linking date keeps extending. This linking date keeps extending. The last two sections are who should sign the return. That is the same. Everybody can sign the return. They have the power of attorney. And self-assessment tax. That is, the tax paid after 31st March for the year is known as self-assessment. Please understand what is self. Simple words. If you file it within the set financial year, I call it as advance tax. If you file it within the set financial year, we call it as advance tax. If you file it beyond that period, it is known as self-assessment tax, which the assessee has to pay, and majority of the time this is paid along with the return, filing of return, or nowadays you can even keep it as due and file it. Just read through once the whole provision. Okay. Now coming to examination oriented approach. If at all they ask, it can only be one of the objective type question on the due dates. Okay. But I don't think 130, because 139 is there at the inter level itself. They ask you what is revised return, what is belated return, etc. at the inter level and leave it. I don't think so. It is going to be anywhere question. Now we just proceed to some of the case laws. Govind Nagar Sugar Limited again assured that these due dates are only for business loss and not unabsorbed depreciation. Unabsorbed depreciation can be carried forward even if return of income was not filed within due date. Again and again, this has been said in the law, and Govind Nagar Sugars is one other case. Which issue? The second case is something interesting. The assessee failed to claim a deduction, failed to claim an expenditure while filing my return of income. Can I claim it to a letter or other sort of intimation with the assessing officer? The answer is no. The answer is no. It can be only by filing a revised return. Can assessee revise the particulars of income by filing a revised statement of income directly to the assessing officer? No, no. Whatever I said in return, please ignore. No. AO, assessing officer, has no power to entertain a fresh claim made by the assessee after filing of original return, except by filing of a revised return. You can only file a revised return. You cannot directly communicate to AO saying consider this. Kausalya Bai's case law, you say that all deposit or if you want to open a bank account, you need PAN. It is not so. PAN is required only if your income exceeds 250. Okay, but this is only a theoretical case law. Practically, if you go to the bank, they are asking PAN. If you enter bank, they are asking PAN and Aadhaar. If you just enter the bank. Okay, right. Dalmia Power Limited. I told you that CBDT has the power to extend the due date. CBDT has the power to extend the due date. How this power can be utilized? And is the power of extension only for the original return? Here is this along with Maruti. That's why I told you yesterday when I read question number 2A in our question paper, I said that you will understand this as Maruti Suzuki case. The facts are as it is placed. Delay in submitting the revised return of the amalgamated company. Please understand. X Limited amalgamates with Y Limited. X Limited amalgamates with Y Limited. Now Y Limited has to file the return, revised return for X Limited. Y Limited has to file the revised return for X Limited. When they can file? Only if the amalgamation process is through with NCLT. Final order is passed. Delay in submitting the revised return of the amalgamated company due to the approval of NCLT, but the delay is belong to the time limit specified under 139(5). Is it permissible, or I should again go to the CBDT and get the approval? What NCLT technically does, or court technically does, is it intimates every department. Do you have any objection? Do you have any objection? It intimates to every department. Held by the Supreme Court. That's why I said this case has been already tested. If you go and read the facts, you will understand this and the Maruti. That in view of section 170, the department was required to receive the revised return of an income of the assessee. The delay was due to the time taken to obtain sanction of the NCLT. Okay, it is NCLT because I cannot file unless the NCLT passes an order. Unless NCLT says yes, the return A Limited has merged with B Limited, how will B Limited file the revised return of A Limited? I don't have the power. Neither has A Limited because their application is pending before NCLT. So the delay was due to the time taken to obtain sanction. Section 130, this is the power of the CBDT, would not be applicable where the assessee has restructured his business and filed a revised return without any objection from the department. You should have told at the time when NCLT asked, no, we are not allowing any revised return, or all assessments of A Limited is over. Nothing has been said, so it should be accepted. Okay. This question will not come, don't worry, but this is also a question. Assessee filed its return belated as the appointed firm of auditors had some reservation in valuing, which was communicated to the assessee late. Assessee had to approach another auditor and complete the audit and file the return. Condemnation of delay was applied to CBDT, which did not respond. High Court said that the assessee cannot be blamed as the reasons were beyond his control. The High Court said that the CBDT should exercise the discretion in a proper manner and condone the delay. Extend the due date for this company because it is not the mistake of the assessee, it is the mistake of the auditor. Okay. Same way, Lodi Properties, assessee is unable to file due to he came to the old case. He came to the department late on the due date. Okay. Delay of 1 day only. Next day itself he filed and it is allowed. Okay. In this, for namesake, okay. I don't find Govindnagar or Orissa. Okay. Dalmia is questioned, but please be clear about Dalmia and Regan Power Limited. Dalmia and Regan Power Limited, if at all there is going to be a question. So, less than 5 minutes you should spend in 139 and complete it. Okay, right. Before going into the next stage, let me make you ready for what we are going to study at the next level. Okay, before progressing and completing the next level, I want to make you ready on what we are going to study in our next level. The assessee's job is over. The assessee's job is over by filing the return. From here on, assessee will be more like a responding party than an initiator. He will only be more like responding. So before going to that, I want the class to be clear about certain things. The first thing I want you to understand is what is assessment. First thing I want the class to understand is what is meant by assessment. You should remember it is done by somebody who is known as assessing officer. He is not appointed by you. The person assessing is known as assessing officer and he is not appointed by you. He is appointed by CBDT, Income Tax Department. So he will only work for the department, not you. First thing you all have to understand, assessing officer is not appointed by you. He is appointed by CBDT. He will only work for the department, not for you. Why I am saying this is, his purpose or what is assessment is, assessee has not understated his income, claimed excessive loss, Okay, underpaid taxes, claimed excess refund. This is what this assessment. Remember, his job is not to work for you. His job is to work for the department. He will not come and say, you have paid more taxes. Why are you doing so? His job is to ensure that you have not understated your income or claimed excessive losses, or you have not underpaid your taxes or claimed an unfair refund. Shall we repeat together? What is assessment? Assessing officer ensures that assessee has not understated his income, claimed excessive losses, underpaid his taxes, or claimed excessive. This is known as assessment. In assessment, this is what I see, because I am not appointed by you. I can act only department friendly. Who is giving me remuneration? Department. I can be loyal only to the department and not to the assessee. So, these are going to be my key things in remembering. I'm just preparing the base work to take you there. I'm just preparing the base work to take you to the process. The next thing I want the class to understand is how many types of assessments are there. How many types of assessments? Trust me, there are only 3 types of assessment. Scrutiny assessment, reassessment, sometimes it is going to be first time assessment also, block assessment. Only 3 types of assessments are there. Scrutiny assessment, which happens very often to verify these things. The purpose of scrutiny assessment is this. Reassessment. Income tax gets some department, the department gets some information. On that basis, they reopen your books and audit and assess. Block assessment is only for search cases, raid. Very rare. Let's leave that set of population. You only have 2 types of assessment. You only have 2 types of assessments. What are they? Scrutiny assessment, reassessment. Only 2, which are popular. Block assessment is a separate set. A tail piece for all these assessments is known as, for all these assessments, there is something known as best judgment assessment. If assessee is not cooperating in any of this, not in just here, not just here, not just here, in any of this, if assessee is not cooperating, then the assessing officer will complete the assessment based upon the best of his judgment. So, this is not a separate procedure. This is an extension of these procedures. It's a tail piece. Okay, only if is or not properly adhered to, this comes. Okay. So there are three assessment process: scrutiny, reassessment, block assessment, along with that. So only three processes, not more. It is wrong to say that there are more assessment process. Only three. Scrutiny is what is more popular. Reassessment only if the department comes to know later that income has not gone taxed. Block assessment only search and seizure cases. Tools of assessment. That is, to do these three assessments, I need lot of information. To do these three assessments, I need a lot of information. That is all contained in section 142. Section 142 is a common section. Can I repeat again? Section 142 is a common section for all these three. Section 142 is a common section for scrutiny, reassessment, or block assessment. It speaks about tools of assessment. Let's see. We are going to start our discussion from there only. But one thing you have to nail it into your mind is there are only three types of assessment: scrutiny, reassessment, block assessment. Wherever Icici is not coordinating, it will go to BJA, and tools of assessment is 142. Before going into the main aspect, two more things I am going to make you clear. If the communication from the department is one way, shall we repeat? If the communication from the department is one way, they don't expect you to reply. If the communication from the department is one way, it is known as intimation. They just, boss, that's all. They don't want you to respond. You responding is different. Intimation is a one-road communication, one way. If the communication from the department is for both ways, it is known as notice. If they want you to respond, they call it as notice. If they just want to inform and leave it, whether you respond or not is not their problem, it is known as intimation. Intimation is a one-way communication. Notice is two-way communication. This notice which I am speaking about, can be information seeking notice. Can you provide your books of accounts? Can you provide a retained statement? Can you provide your returns? Can you provide this information? Information seeking notice, which is normal. The next is very, very popular, okay, which is popularly known as show cause notice. The next is very, very popular, which is known as show cause notice, SCN. Show cause. Show me the reason. Once more, show me the reason why I should not do it. Show cause notice. The first one is an information seeking notice. The second one is show cause notice. Show me a reason. The wordings will be so. We have identified that your income has been understated by 1 lakh. Show me a reason why I should not add this to your income and allow and ask you to pay tax, interest, penalty, etc., etc. If you show the reason, they are going to allow it. But the wordings will be show. Show cause notice. So, intimation is a one-way traffic. Notice are two types of notice. Information seeking notice and show cause notice. Both needs to be responded by the assessee. And one more thing which I want you all to know before progressing to the procedures is principle of natural justice. Our entire law, not only income tax law, entire legal system goes by this. Principle of natural justice. I cannot take an action against you. I cannot take an action against you unless I give you an opportunity to be heard. I cannot take an action against you unless I give an opportunity to you to being heard. You have the right of representation. I cannot use any external information unless I give you an opportunity to be heard. Let's go back to our APA. APA cannot be rejected without giving an opportunity to the assessee to represent. Advance ruling application cannot be rejected unless an opportunity is given to the assessee to be heard. TPO cannot pass a unitary order unless an opportunity is given to the assessee of being heard. Opportunity to the assessee is mandatory, not only assessee, not only our income tax law, our whole legal system speaks about principle of natural justice. Everywhere from now on, an external information is going to be used. Principle of natural justice will come. Assessing officer going to pass an order. Principle of natural justice will come. Everywhere from now on in the law, whatever we are going to study till 280s, an external information going to be used. I got an information about you. Principle of natural justice. I can use that information. I can use that information only after giving you an opportunity, because you are blindfold. You don't know what that is. Second, assessing officer is going to pass an order which is going to be prejudicial to the assessee, which is going to be against the assessee. He cannot do so unless an opportunity, rejection of APA, rejection of advance ruling, everything unless an opportunity. So let me be very clear. What is assessment? What are all the types of assessment? What are all the tools? We are going to study what are all the tools. What the tools are said in 142. What is an intimation? What is a notice? What are all the types of notice? And the principle of natural. Remembering all these things, I'll come to the authority chart later. I go to, as I told you, tools of assessment. All of us listen. Tools, assessment, process. Tools of assessment. Totally 6 process. Totally 6 process. 3 internal, 3 external. Totally 6 process, which is going to be for all assessments. Totally 6 process. 3 are internal process, 3 are external. Internal means from the assessee. External means from somebody else regarding the assessee. Okay? Totally 6 process. 3 directly I ask the assessee. 3 I ask somebody else about the assessee. The first process is asking the assessee to file his returns. The first process is asking the assessee to file his return. If he has already not filed, assessing officer sends a notice, information only. My dear friend, you have not filed, please file your return. AO sends the notice asking for filing of return where it has not been filed. And it will be sent only after the due date. And the response for this can only be filing of return. The response is, I am not required to file my return. Why should I file? When the information is sought from you, when a notice is sent to you, you can only favorably respond. So the response can be only, okay, go ahead and file your return. The second process is sending you a notice asking for books and documents. Shall I repeat? The assessing officer sending you notice asking you to give books and documents. Produce books and documents. What can be the response? The response can be giving the books and documents only. Okay? And they cannot ask for a period beyond 3 years. It means the person who is sending. But the senior officials, okay, joint commissioner and above officials, they can ask you to give for a longer period also, which we will see in the third assessment process. Okay, so the second thing is production of books and documents, and the third thing is very simple. Whatever you are telling, please write it. Tomorrow you should not change it. So whatever you tell, where the AO seeks the assessee to give statement in writing, it is known as inquiry. There are 3 internal processes. There are 3 internal assessment processes. What are all they? A, asking you to file your return if you have already not filed. Asking you to produce books and documents, asking you to give the statement in writing. All these things are now with faceless. All these things are now faceless. That's why all these sections are going to lose its importance, and the sections which are going to come later, now 142B, that is yet to be notified, but whatever we are going to study later is going to be more important. Everything of this is now faceless. Everything you have to do electronically only. Fine. 3 internal processes, that is asking the assessee about the assessee. File your returns, produce books of accounts and documents, and give everything in writing. Asking about the assessee to an external person. Asking about the assessee to an external person is popularly known as inquiry. English language itself says inquiry internal, inquiry external. Inquiry. I ask the supplier to give a ledger extract of the assessee's accounts. I ask a debtor, a customer or supplier to give a ledger extract about your account. Inquiry. Obtaining details about the assessee from some other person. Okay, understand this. And I got it. And I got it. Now I am going to use it. I'll give you an example. I got from your supplier or I got from your customer that the total sales by you to that customer is 90 lakhs. When I see your books of accounts, you have only recorded 70 lakhs. The customer has recorded that he has purchased from you for 90 lakhs. When I look into your books of accounts, you say that the sale is only 70 lakhs. Shall I directly increase your income? Principle of natural justice. What is principle of natural justice? I cannot use that information without giving an opportunity to you to represent. I cannot directly send a demand notice. I understand 20 lakhs income understated, pay 6 lakhs of tax, pay so much as interest, pay 6 lakhs as penalty. I cannot do so. How to give you that opportunity is by issuing a show cause notice. I give that opportunity. I will give you the show cause notice. The wordings will be so. From your customer accounts, I understand that the sales made by you is 10 lakhs. Show me a reason why I should not increase your income by 2 lakhs, levy tax on it and interest penalty on it. A show cause notice will be issued. What is the word? Show cause notice. That is what is principle of natural justice. Show me the reason. I'm giving you an opportunity. Show me a reason why I should not consider this income. AO shall issue a show cause notice after considering the above. When will show cause notice be issued? 2 circumstances. When I am using an external information, I will use show cause notice. Because you don't know it, I am using it. Second, when I am passing an order which is prejudicial to the assessee, I should issue show cause notice. So a show cause notice will be issued considering the data. Then comes what is popularly known as special audit. I am not happy, assessing officer is not happy with the way the books are maintained by the assessee. It is very complex in nature. It is very voluminous in nature. I don't have time to look through your transaction, but I'm suspicious that this fellow is not correctly maintaining his books. Doubts about the correctness. I'm suspicious. Or specialize the nature of transaction, construction contracts. I want to understand whether he has done the percentage of completion method correctly. Probably 70% completed, but this man is accounting only 30%, 40%. Due to the complexity of books of accounts, due to the voluminous of books of accounts, due to specialize the transaction, or due to a suspicion in my mind about the correctness, what I will do is wait. I will call an auditor. Who are you calling? Okay. I will call an auditor and say, go and audit his books of accounts. Assessee immediately says, no. My books are already audited by another auditor. So what? This is department appointed auditor. The purpose of a statutory audit or tax audit by your auditor is different. True, fairness, etc. Here, this departmental auditor's purpose is different. Revenue loss for the department, is it there or not? That is why he is appointed. So, auditor will be appointed and auditor needs to submit his report. Okay? Should the assessee be given the principle of naturality? Yes. I should tell to the assessee why I am appointing an auditor. And I should also tell the assessee, look, the auditor has submitted the report, I am going to use it. Okay? In two circumstances, for ordering audit and for using information, show cause notice will be issued. That is principle of natural justice, and the auditor has to complete within 180 days. Auditor's remuneration is paid only by the department. Okay? Where the special auditor has not performed his task, AO cannot proceed against the assessee. But if he has not performed due to assessee's default, then only AO can proceed against the assessee. Special audit shall be performed even if the books are already audited under this law or any other law. This is what I said. Okay. The third external tool is the valuation officer coming into play. This is very useful, especially in search and seizure. In the normal scrutiny audit, this will not be a very big thing. But when you go for a search and seizure audit, then the valuation officer, because you have seized a lot of assets, because you have seized a lot of jewelries, etc., the value has to be determined. Then the reference has to be made to the valuation officer. Within 6 months, the valuation officer will submit his return, will report, and the assessing officer cannot complete his return, his assessment without considering the VO's report. VO's report is very essential. AO cannot, like TPO. AO cannot ignore TPO's report and complete assessment. Similarly, AO cannot ignore VO's report and submit and complete the assessment. All these things are going to be now faceless. The notification is yet to come. The notification is yet to come. So all these cases are going to be faceless. Okay, their notification is pending. Faceless assessment notifications are issued. Procedural notifications are yet to be. What are all going to be faceless? Making inquiry under 142. Making inquiry, directing assessee to get books of accounts audited, faceless, making reference to a valuation officer, faceless. All these things are going to be faceless. So 142B, when this section comes, all other sections will fade off. When 142B, a new section comes, all other sections will fade off. That is why I say the possibilities of questions are getting eliminated in all these cases. Am I clear to you? Okay, right. What types of questions will come in assessment? In my opinion, only two types of questions are going to come. Either case law based or faceless. Either case law based or faceless are the two types of questions that are going to come. Let's wait and see. Let us wait and see. I am going into the first process of assessment that is popularly known as scrutiny assessment. That is popularly known as scrutiny assessment. Just give me a minute. As I told you, there are three processes of assessments. There are three processes of assessment, three types of assessment, sorry. Three types of assessment: scrutiny assessment, reassessment, block assessment. As a tailpiece, we are also going to study best judgment assessment. Provisions of scrutiny assessments are there in section 143. Not only scrutiny, from the beginning to the end, it is there in section 143. 143 has three sections, my dear friends. Basically, importantly, three sections. First, we call it colloquially as prima facie adjustment. What do we call it? Prima facie adjustment. Second, notice for scrutiny assessment. Third, scrutiny assessment by itself. Okay? 143 has three provisions: prima facie adjustment, notice for scrutiny assessment, scrutiny assessment by itself. Okay? Shall we start? Shall we start? What is meant by prima facie adjustment? Law uses the terminology called mistake apparent on record. Mistake apparent on record, which means there is no debate possible. I filed a return with a mistake. For example, shall I tell you? Net annual value 1 lakh, rent per month into 12 lakhs. Standard deduction at 40%. What can be the maximum standard deduction? 30%. But how much did I claim? 40%. Mistake apparent on record. There is no debate. I have made a mistake. Depreciation on plant and machinery at 25%. I can only claim 15%. When I claim 25%, it is a mistake apparent on record. ATC maximum 150. I claimed 2 lakhs. Mistake apparent on record, prima facie adjustments. Prima facie adjustment. There is no debate at all. Director, these are wrong. What type of mistakes? Arithmetical errors can be there. Total mistakes. Arithmetical errors can be there. Incorrect claims, that is, claim in excess of limit. Claim in excess of limit. 150 only I should have claimed, I am claiming 2 lakhs. I should have claimed only 30%, I am claiming 40%. I should have claimed only 15%, I have claimed 25%. Auditor in Form 3CD has said payment in excess of rupees 10,000 on a single day is 5 lakhs, which I should have disallowed in my computation. Non-disallowance based upon I have not found out. Your own auditor has said you are supposed to disallow. Last year you filed your return late. What is the benefit loss for belated return? I cannot claim the losses. But this year in your return you have put less business loss brought forward. Last year you have claimed it, you have filed your return late. You have lost the benefit of claiming the business loss, but this year in your return you have put. Is there any debate that you should not? And all this 80I, for that you should have filed the return within the due date. You are filing a belated return claiming 80I. You are filing a belated return and you are claiming 80I. In all these circumstances, there is no debate at all. Computerized system, we call it as CPC, Central Processing Center. The computer by itself will pick the mistake and send you an intimation. What are they sending? Intimation, one-way traffic. You need not respond. See, you have done a mistake apparent on record. This is the intimation. Suppose if the intimation is wrong, then the only recourse available, we will see tomorrow morning, section 154. The only recourse available is rectification of the intimation. You have to approach the assessing officer. Where the intimation, where the rectification, where the mistake apparent has resulted in payment of tax, the intimation will be sent to you along with demand notice. Pay the tax within 30 days of the intimation. So if you have an objection, object also within 30 days. Otherwise, it is deemed to have been accepted. Okay. Where the intimation is resulting in a refund, refund order is passed, but refund need not be issued immediately. Tax demand means within 30 days. Okay. Where it results in a refund, I will come to that very soon. Remember, if there are no adjustment, if your return file is correct, no intimation, nothing, you have filed, which is correct. Okay, no intimation, where there is no change in the returned income. Okay, then intimation is not mandatory. But all cases which are taken up for assessment, intimation is mandatory. All cases that are taken up for assessment, intimation is mandatory. This is the section I said. AO has the power to withhold your refund. Assessing officer has the power to say, don't issue refund now. I want to assess this case, and there is a possibility that this person has not fulfilled some condition. AO is of the opinion that grant of reason will affect the revenue. Grant of refund will affect the revenue, then he can withhold the refund. Okay. However, till completion of assessment only he can withhold, not beyond that. Not beyond that. 143.1, popularly known as summary assessment, mistake apparent only by the CPC where there is no debate at all. Okay. One reading that is more than sufficient. 143 subsection 2. 143 subsection 2, notice of scrutiny assessment. I told you 3 sections are there, 3 things are discussed. First is prima facie adjustment, second is notice. The department has to tell you, boss, your case is taken up for scrutiny assessment. Now all these sections are gone. I am also meaning that, because everything comes under faceless assessment now. Though it is there in the law, they have not yet scrapped it, but it is deemed to have been scrapped because the notice will be issued by faceless assessment center. Because when I start assessing officer, that AO is not going to do the assessment at all. The assessment is going to be done by an assessment unit. So the entire focus of the law is now. That's why I feel that these things you should read it once and forget it. I will tell you what is the questionable area, because if I directly go and teach you only read these things, you will always have a fear in your mind. At the back of your mind, there will always be a fear, did I miss? We will do it once. You listen to it once. Later read it once. But I will tell you what can be the questionable area also. Which are all the case laws, we will mark it and read it. And also faceless assessment, faceless appeals, we will read it. Penalties can be a questionable. When we go to the questionable area, when you understand the questionable area, you will be in a better position to appreciate it. These things are going to go out of the law itself because the entire procedure has changed. So don't worry about all these. Okay. At the same time, for giving you the confidence, I want to once run through this. Notice for scrutiny assessment, telling you that, boss, your case is taken for scrutiny assessment within 6 months from the end of the financial year in which return is filed. So you have to, for the year for the year ending 2021, you will file the return now. If the department want to take up your case for scrutiny assessment on or before 30th September, they should have given you the notice. On or before 30th September, they should have sent you the notice. Notice of scrutiny assessment should be sent within 6 months from the end of the financial year in which return of income is filed. Okay. And the notice will tell you what are all. We will come to that. I told you all these things have gone to National E-Assessment Center. No more assessing officer is going to issue, only National E-Assessment Center. We will discuss this specifically. We will discuss this specially. Sir, please explain. End of the assessment year and end of the relevant assessment year and end of the assessment year are same. Okay. 31/3/21, 2021 previous year. So it ends on 31/3/21. End of the assessment year or end of the relevant assessment year is 31/3/22. Why they use relevant assessment year? Because if they speak about previous year 18-19, end of the relevant assessment year for 18-19 is 31/3/20, 19-20. Okay, end of AY is for whenever we are talking about the current years. End of relevant AY is whenever they are talking about any of the preceding year. That's why they use the term end of the relevant assessment year. Coming back, what is meant by scrutiny assessment? So what is assessment? What is assessment? Assessment means AO should ensure that the income is not understated, loss is not excessively claimed, tax is not underpaid, and refund is not excessively claimed. So AO has to ensure that. For that, he will issue notice asking you to give you books of accounts, document, give everything in writing. After going through all these things, how we will speak about in National Assessment Center. After going through all these things, on the date specified in the notice and on further dates after taking into account all materials presented by the assessee, after recording all the reason, AO shall pass an order in writing. What is that? Determining the income, the loss, tax, and refund to be provided, and send a copy of it to the assessee. Now this is not there by the AO, it is only by the National E-Assessment Center which is going to do this. Then there is a second methodology called administrative assessment. Please understand, first proviso is assessment. Second provision, even yesterday I was telling you, exemptions are claimed by various institutions, news agency, scientific research institution, scientific research association, specified funds. They are all getting exemption. On what basis? They are all fulfilling some conditions, so they are getting exemption. I, the assessee, donated to a scientific research association. I claimed 100% of the contribution as a deduction. The receiver should do research. The receiving research institution should do research. If they don't do it, I am giving them exemption. I am treating them as a research institution with the belief, I means income tax department, with the belief that they are doing research. What if they are not doing research? What if they are not doing research? So comes this question. So we show 2. This is applicable to a trust, institution, body, association, or news agency which are claiming exemption. AO has to verify. Here I am not verifying whether your income is understated, loss is excessive. I know these institutes are exempt. AO has to whether conditions upon which exemption is granted to you is fulfilled. The conditions on which I gave you exemptions, whether those are fulfilled. Where the conditions are not fulfilled, can the AO say no, exemption is withdrawn? No. You have to intimate to the CBDT, which is the authority to withdraw exemption. Exemption is not granted by AO. Exemption is granted by CBDT. So, where the conditions are not fulfilled, AO has to intimate to the CBDT. Such authority only has the right to withdraw the exemption, not they. They will withdraw the exemption and intimate AO, tax them, and then AO can pass a taxing order. Only thing is, this commissioner who is granting for trust exemption is not granted by CBDT. Trust exemptions, yesterday we saw, is granted by commissioner. So that is by the commissioner. Okay, right? Three things in 143, all faded, has gone to faceless assessment, but yet to be removed by the law. That's why I'm asking you to just browse through. That is enough. The three things are, the first one is still there, prima facie adjustment by CPC. The next two are taken over by National E-Assessment Center, 143 subsection 2 and 143 subsection 3. 143 subsection 2, notice 6 months from the end of the year in which you filed your return. 143.3, completion of assessment and sending the assessment order, or for a research institution or association or scientific research bodies, check whether the conditions upon which you gave the exemption is fulfilled. If the conditions are fulfilled, fine. If the conditions are not fulfilled, intimate it to the CBDT, which will withdraw and then give you the order to pass the assessment. Where the assessee fails to cooperate, once more, where the assessee fails to cooperate, then comes best judgment assessment. This is also there in faceless assessment. I am going to talk about BJA also in faceless assessment. Okay, this is also moved there. So overall we will understand it soon. How will you say assessee is not cooperating? He is not filing his return. Either voluntarily or in response to a notice, he is not filing return. I sent him a notice to file return, he says, no, I will not. I sent him a notice to give books of accounts and document, he says, poda day. I sent him a notice to ask his books to be accounted by an auditor who is appointed by the tax department, he is locking the doors of the business. I sent him a notice asking for giving me some information. He is torn off the notice, or he is not at all receiving the notice. Write these things, I'm just saying. Assessee is not cooperating. Can the assessing officer say? Can the assessing officer drop the assessment? Sir, assessee is not cooperating. Let's drop the assessment. Then no assessee will cooperate. The assessing officer shall, which means mandatory, complete the audit under best judgment. Where the assessee is not cooperating, go for BJA, go for best judgment assessment. What is it? The wording says best judgment. Based upon the information in assessing officer's hand, he will complete the assessment. Based on information in AO's hands, he will complete the assessment. What information? On a scientific manner. Last year, assessee's turnover is 5 crores. This year, the industry has grown up by 10%. So, assessee's minimum turnover should be 5 crore 50 lakhs. The normal gross profit of this industry is 20%. So, assessee should have earned 1 crore 10 lakhs. Like that, on a scientific basis, AO has to compute the income. He cannot arbitrarily determine, even though assessee is not cooperating. On seeing you, I think you should have earned 2 crores. That is not correct. That is arbitrary. On a scientific basis, you need to compute and complete the assessment. You should intimate to the assessee that I am going by best judgment assessment. How will you say? By issuing a show cause notice. Show me a reason why I should not take up your case for best judgment. Immediately, sometimes assessee will get jittery and start cooperating. Then go by the normal scrutiny assessment itself. If he is still not showing the reason, go by best judgment. Where assessee fails to file return, fails to respond to notices, fails to cooperate with the special auditor, then AO shall complete the assessment with the available information and evidences gathered by him to the best of his judgment and determine the income and tax. AO has to substantiate. It cannot be arbitrary. It should be on a scientific basis. Show cause notice has to be issued to the assessee, which will be there before taking up the case under BJA, where assessee starts cooperating. Sir, sorry, sir. Then go by the normal process. Assessment under this section 144 can only be revenue friendly. It cannot result in refund and all. It can, if it is refund, why will not the assessee cooperate? It can only be revenue friendly. Thank you. 144 best judgment assessment is not only for scrutiny assessment, my dear friends, even for reassessment non-cooperation, even for block assessment non-cooperation, it will come back and strike 144 best judgment assessment only. Powers of the Joint Commissioner to issue directions. What is this? To issue direction. Remember this. To whom he can issue direction? To his subordinate only. He cannot issue direction to the assessee because they don't have any relationship. Only to his subordinate he can issue direction. Okay? A case is prolonged. The case is taken for assessment, but it is getting prolonged, either due to assessee or due to assessing officer. A case is getting prolonged either due to assessee or the assessing officer. So what the Joint Commissioner will do is either on his own or on a reference made by assessee. Assessee will say if AO is prolonging. AO will say if assessee is prolonging. He will take up the case, look through the case and say, complete the case like this. Complete the assessment like this. To whom he can give that direction? To his subordinate. Can he give a direction? Complete the assessment by asking the assessee to pay tax of 1 crore. No order prejudicial can be passed without principle of natural justice, without giving an opportunity to the assessee on his own or on an application made by the assessee or assessing officer shall call for the records and proceedings and issue direction as if he deems fit. What for? For closing out the case. No direction shall be issued prejudicial to the assessee without giving him an opportunity. And AO, once he gets a direction from the superior authority, he has to abide by it. All these things are gone for faceless things. Okay, all these things are gone for faceless. Just have a read through whenever you find time. Once read through as a story, if you read through, it will be simple. The rest is in faceless assessment. Ragji Bhai, Nagji Bhai, TCR. This case law is already twice questioned. Is AO bound to consider the VO's report? I told you, in TPO also the same question we studied. Yes. Once you have referred the matter to the valuation officer, the report of the valuation officer should be considered and assessment should be completed accordingly. Yes, bound by it. Two sections which gets importance. Please remember these two sections not only for your examination but for your life. These two sections are essential. Accidentally you made some mistakes. Assessee made some mistakes. Accidentally there are some errors. Can that be rectified? Oversee it? The law says possible, boss. Possible. This is nice to you? Reverse. Accidentally, AO has made a mistake. Notice has to be served within 6 months from the end of the financial year in which a return has been filed. AO has not done within 6 months. AO does it in the 7th month or 8th month. Assessee starts cooperating in the process. Later, assessee says, sir, notice is wrong, sir. You started participating. You started cooperating. Now don't tell me notice is wrong. Now don't tell me notice is wrong. Section 292B and 292BB speaks about validity of notices. Return of income, assessment order, notice, summons or any proceeding shall not be invalid or deemed to be invalid merely because there are some mistakes, defects or omission. In short, the AO or assessee can oversee those typographical, arithmetical errors. This is okay. 292BB, look at this. Where assessee has appeared in any proceedings and cooperated in an inquiry, it shall be deemed that any notice required to be served on him is duly served and is in accordance with principle. In short, where a notice is time barred but assessee starts cooperating, then assessee is condoning the delay. Repeating, if the notice is time barred, you just contend at the beginning itself. What do you do? Okay, let me go and see. If the judgment is going to go against me, at that time I will say notice is time barred. Not possible. when you have started cooperating, where assessee has appeared in the proceedings, cooperated in the inquiry, it is deemed that whatever default is there in the notice, you have accepted that. You have condoned and accepted. In this, Maruti Suzuki case gave a new dimension. எப்படி? A Limited, are you listening? A Limited amalgamated with B Limited. A Limited amalgamated with B Limited. NCLT approved. Everybody is aware, the department and everybody is aware. Assessing officer sent notice to A Limited for scrutiny assessment of the past years. B Limited responded to the notice and participated in the process. B Limited respond, because B Limited is the standing company now. A Limited is not there. B Limited responded to the notice and started participating, cooperating in the assessment process. B Limited later contended, notice is valid illa. The notice is not valid because the notice is issued against an assessee who is not in existence. B Limited now contended that the department has issued a notice with A Limited, an assessee who is not at all there. Department contended, you participated, boss. You participated in the process. You should have said that in the first place itself. You should have said that in the first place itself. Okay. When after participating, it means you have condoned the delay. Case went to Supreme Court. Supreme Court asked, who is he to condone? Who is the assessee? Is assessee A Limited or B Limited? Those are proceedings are against A Limited. Then he is only the assessee. He only has to condone. Who is B Limited? Sir, he is the now amalgamated company. Are you auditing? Are you assessing the amalgamated company or post-amalgamation company? No, sir, I am assessing the amalgam. Let that company only should condone. Very intricate case law. Notice was served and assessment was completed in the name of erstwhile amalgamating company. Even after the scheme of amalgamation and the intimation, everybody has approved. AO contends that the transferee company cooperated in the proceeding. So section 292B, just now I read, cures the defect. Yes, sir, I should have issued, no doubt about it, but I issued. Held by the Supreme Court. Approval of the scheme is a proof that the transferor company is no more there. Okay, he is no more there. Despite knowing this, AO has issued in the name of the non-existing company. Assessment proceedings on a non-existing company is void ab initio, and the participation by the transferring company cannot cure the defect. When you know that that person itself is not there, you should have issued the notice to the transferring company. So, it is not applicable. This is the question. Dalmia, return can be filed after amalgamation by the other company automatically, because only then they can revise the return. Maruti Suzuki, the same manner. It's a very, very important case laws. Both these things are very important case laws. Give me a 5-minute break. I will come and discuss reassessment. So what we have completed, section 139, the various types of returns. Section 140 is whatever we call it as self-assessment tax, linking of Aadhaar, PAN, signatories, all these things. 142, the procedure or the process of assessment, which is 6, 3 internal, 3 external. 143, first level of assessment, which consists of prima facie adjustment, notice, assessment. 144, best judgment assessment, giving the power to the Joint Commissioner to interfere and issue direction to the assessing officer. Notice invalidity when it can be removed, along with the Maruti Suzuki Limited case law. This is where we are in. So far, I have asked you to remember 3 case laws: Dalmia, Region, Maruti Suzuki. Other than that, this Orissa housing or depreciation case laws are not very key. But these things, if you remember, I am crossing 143, 144 and going up to 147. Okay, 145 is method of accounting. Now ICDS has replaced it. So next process is popularly known as reassessment. Okay, first listen. You filed your return. Within 6 months, there is no notice. Enjoy. Your case is not taken up for scrutiny. In a year, 3% of the case is only taken up. Maximum 5%, 3 to 5%. So, 95% chances that your case is not taken up. And in a lifespan of 30 years tax paying, I assume that from, let's take 27, 28 years to 58 years, somebody is paying taxes. Twice, if he is scrutiny assessed, big thing. Twice. Okay? That itself is big thing. I'm very honest to you. So, the chances are very less. Now, let me go into the second part of my discussion. The scrutiny assessment notice was not issued. There was no need. It was not issued. Computer did not pick up your case. Now I get the information when I am assessing. For example, when assessing officer is assessing the case of Rishabh, the assessing officer comes across a transaction Rishabh had with me. I have sold the land, Rishabh has purchased that land. So, assessing officer accidentally looks at my record to know whether I have correctly paid my capital gains tax, and he understands that I have not disclosed it. Then he checks the time limit for issuing notice for scrutiny assessment is over. But he has authenticated proof. Assessing officer has authenticated proof that I have not disclosed my income properly. Assessing officer has issued scrutiny notice, completed scrutiny assessment. Now when from Rishabh they understand that the asset I have not sold is properly not disclosed or so please understand the next level assessment. The first level assessment, I don't want any information. Computer picks, I send notice. The next level assessment can happen only if there is an authenticated proof that income has escaped assessment. The department should have, the assessing officer should have a proof on hand saying this person's income has not been properly assessed. Income has escaped assessment. The proof can also be actually he has disclosed. Let us take for example the sale that from Rishabh records, they understand he has purchased the land from me, and when they took my records, I have disclosed it. But I have disclosed it as long-term capital gain, which is only a short-term capital gain. If it is long-term capital gain, I would have claimed 54 or 54 EC and paid only 20% as tax. If it is short-term capital gain, I cannot claim exemption and the tax rate is higher. This is also income escaping assessment. Either it would have been assessed earlier or not assessed. Shall we first understand what is income escaping assessment before even coming to the main section? This is the questionable area. What is meant by income escaping assessment? I have taxable income, but I have not filed my return. I have filed my return, but not properly declared my income. I have filed my return. The assessing officer has completed the scrutiny assessment. Now the assessing officer comes across a detail that my income has escaped assessment. A survey is being conducted in my business house. A survey is being conducted in my business house. Survey means it's a process where the survey officer has found out that I am not maintaining stock records properly, that I am not valuing my stock properly. He intimates to the assessing officer, look, this fellow has not properly maintained based upon survey, based upon transfer pricing regulations. What is meant by income escaping assessment? Where no ROI has been filed, return of income is not filed, but the total income has exceeded basic exemption limit. Return of income not filed, but now the assessing officer is having sufficient proof that my total income has escaped. I filed a return of income, but no assessment is made, but it is now identified that I have understated my income or claimed excessive losses or any other. Return of income filed, but no assessment has been made. Third case, return of income is also filed, assessment is also made, but now the assessing officer understands that I have been taxed at a lower rate or income has escaped assessment. Where the assessing officer identifies that there are assets located outside India based upon the report of the auditor of transfer pricing, based upon a survey. Okay, based upon the survey, they come to know that income is understated. Income has escaped assessment. Okay. Thank you. So what is income escaping assessment? Okay. Close your eyes and tell, no ROI filed, but income is more than BEL, basic exemption limit. ROI is filed, but I have claimed excessive benefits or understated my income. ROI filed, assessment has been completed, but now the AO has found out that income has not been properly declared. Based upon survey report, based upon transfer pricing report, or if an asset is outside India and it has not been disclosed by me. In all these cases, income has escaped assessment. Now, I am reading section 147. I am reading section 147. If the assessing officer has reason to believe, assessing officer should have proof. Reason to believe now, he should have proof. He should be able to prove. Today, this is available in 26AS itself. 26AS is no more just a tedious thing. 26AS gives a lot of information now. Okay? Especially after faceless assessment, both the parties should know why. So, AO should have proof. It cannot be arbitrary. This man probably has earned income but has not filed his return. Send him notice. He should have proof. If assessing officer has reason to believe that any income chargeable to tax for any assessment year, any income chargeable to tax for any assessment year has escaped assessment. What is income escaped assessment? 6 circumstances I know. ROI not filed, ROI filed, assessment completed, foreign assets, TP audit and survey provisions. Then what do they do? Subject to the provisions of 148 to 153, following the procedures of 148 to 153, which talks about notice and other things. Assess. Assess means first time. Already I have not assessed. This is the first time I am assessing. Assess. Or reassess. Already assessment is over, but now I come to know something else has escaped income. Reassess. So look at the word. Assess. First time. Or reassess. Already assessment is over. Again I am assessing. Such income. The income for which I issued notice. Or any other income. Such income means the income for which I issued notice, or any other income which has escaped the assessment and which comes to the notice during the proceedings. Quickly, can we recollect? Where assessing officer has reason to believe, I have the proof that any income chargeable to tax for any assessment year. Apriya sir, is it so sir? Can they issue a notice to my father now saying in 1995-96 your income has escaped assessment? That is why the section is a subordinate section, subject to section 148 to 152. In section 149, they say what is the limitation period. Maximum 6 years. Beyond that, they cannot go. Beyond that, they cannot go. Except foreign assets alone, they can go up to 16 years. Rare. Maximum 6 years. So don't worry. Where assessing officer is having sufficient proof that any income has escaped assessment for maximum of 6 years, then following the provisions of 148 to 143, he can assess or again assess, reassess such income, the income for which I have proof, and then I start the assessment, then I come to know some other income is also there. Such income and any other income which has escaped assessment. Section 148 talks about notice. Intimate the assessee. Boss, I am taking your case for scrutiny assessment. Intimate the assessee that you are taking up the case for scrutiny assessment. Assessee can say, why are you taking up? What reason you have to believe that I have? I have been an honest taxpayer. You give me the reason. You are supposed to give the reason. Before making assessment, AO shall serve on the assessee a notice asking him to furnish the return of income, and the provisions of the Act will apply as if 139. So 142 notice will be issued. What is 142 notice? Furnish your return of income. Now that I have found out that your income has escaped assessment, you furnish the return of income for that year or any other years I want. You furnish the return, produce your books of accounts, 142. I told you that is the process, this is the procedure. Time limit, where the income escaping assessment is 1 lakh or more, 6 years. Less than 1 lakh, 4 years only. For foreign assets, 16 years. Okay? Okay? For foreign assets, 16 years. This is the time limit. And section 150 is going to say when this time limit is not applicable. I give you the time limit, and section 150 is going to say Supreme Court has pronounced the judgment. I have to implement that judgment. Then can I, because you know how long it will take to the Supreme Court. Then this time limit of 6 years will not be there. No time limit provision. I'll come to that. Okay? No time limit. I'll go to the other two later. No time limit provision. notwithstanding anything contained under 149. So this section overrules 149. This section overrules 149. AO shall serve a notice of assessment, reassessment to give effect to any finding or direction or order passed by the appellate proceeding. For that, no time limit. Okay. 151 is purely internal procedure. Doctrine of indoor management, who has to give, etc. 152 is at what rate the income will be taxed. Today you are issuing notice for 2014-15, 2015-16. Is it taxable in the rates prevailing in 2021, or is the tax to be levied at the rates prevailing in 15-16? At that rate, tax will be levied at the rate applicable for the respective assessment year for which income has escaped assessment. And 153 says within 12 months complete the audit. Can I tell you in a low manner? 147 assessment, 148 notice, 149 time limit, 150 no time limit, 151 doctrine of indoor management, who has to give approval, etc. 152 rate of taxation, 153 time limit for completion. Actually, start from 148 only. Issue notice within the time limit. Of course, no time limit. Issue notice after obtaining the sanctions. Okay. Issue notice along with the demand for the tax. Complete assessment under 147 within 12 months. So 147 is the last section to be studied, not the first section to be studied. Though the law starts like that, but issue notice 148. Notice will be issued asking you to file your return of income, saying that you show cause notice saying that your income has escaped assessment. 149. What is the time limit? 150. When time limit for notice is not there. 151. Before issuing notice, to whom I should get the permission? 152 rates of taxes, 153 time limit for completion of assessment of that 147. So 147 is the last section to study. Okay, okay. Let's understand 147 again. Where the assessing officer has reason to believe. What did I say? Reason to believe? Substantial proof. Substantial proof. Reason to believe should be documented by the AO. Before issuing the notice, say, I have this proof. While auditing, while scrutinizing the returns of Rishabh, I found that Watson has sold a property to Rishabh. When I took Watson's return of income for that year, I found that he has not declared the capital gains, so I have reason to believe that income has escaped assessment. Reason to believe should be recorded, should be written and recorded. Reason need not be specified in the notice, but the assessee has the right to ask you, supply me the reason. Mere gossip and rumors cannot be the reason. Sir, I think that he has purchased the property, sir. I think a lot of black money is involved. Oh, I'll issue the notice. Check whether he has the ability to purchase the property, whether he has obtained any bank loan. Mere gossip and rumors cannot be the reason. $2,800 times our nose has been cut, but still, even with the bleeding, we are trying to hide it. Now, law itself, the finance minister has gone and said, I will not change retrospectively. But I will tell you, retrospective amendment, can that be reason to believe? For reverse example, what happened in Oriental Ceramics case? Glow sign boards are considered as revenue expenses. Suppose let us take today another case comes where the court says glow sign boards are not revenue expenditure. They are capital expenditure. Assessee can claim only 15% depreciation. One arbitrary example to you. Today, a case law comes where the court says glow sign boards are not revenue expenditure. They are capital expenditure. Assessee can claim only depreciation. Last year, I claimed the whole expenditure. So this year, the law is amended. Based on this case law, the law is amended with a retrospective effect. Now, assessing officer issues notice under 148. Sir, your income has escaped assessment, sir, because you are not supposed to claim, you are claiming. It is now settled position in law. Finance minister in Vodafone case for the 1000th time has said that we will not do the mistake of a retrospective amendment. I don't know. Somebody should tell what it is. No deviation. Okay. It is now settled position. The court asked the assessing officer, at the time of filing the return, is the assessee correct? Yes, sir, he is correct. Later only the law is amended. This is not reason to believe. This is not reason to believe. Assessee believed that your law is correct and filed the return. You amend the law with a retrospective effect. Subsequent amendment to law with a retrospective effect. Can this be the reason to believe? No. The assessee has complied with the provision of the law when he filed his return of income and believed that you will not change. You changing with a retrospective effect and say, don't say now income has escaped assessment. I have not. That cannot be the reason to believe. I completed assessment. The assessing officer, let us take, I completed the assessment. I completed the assessment of our friend Preeti. I passed the assessment order. Next day morning, I wake up and says, no. Yesterday, whatever assessment order I passed is wrong. I feel that it should be capital expenditure only. I wrongly gave it as revenue expenditure. Let us reopen the assessment. Let us reassess the case. Mere change of opinion should not be treated as reason to believe. Mere change of opinion. I changed my opinion. Till yesterday, I had a different opinion. A very, very, very popular case law, enough question, twice or thrice question, is ICICI Prime Securities. Look at the case law. Listen to the case law. The company is in the business of dealing shares and securities. Assessment was completed, assessment order was passed, everything over. Later, the case was reopened by the assessing officer saying, no. I think some transactions are speculative transactions on which you have made a loss which cannot be set off against your normal income. So I am reassessing. Case went to court, Supreme Court. Supreme Court asked the assessing officer, did he hide the detail before? No, sir. He presented all detail. Did you go through all the detail? Yes, sir. I went through all the detail. You initially formed the opinion that these are proper business income. Later, you are forming an opinion. No. These are speculative income. Assessee has not held back any information. He has not hidden any information from you. He has openly given it to you. You are now changing your opinion. Mere change of opinion cannot be treated as reason to believe. Please write the same words in quotes in the examination. That's the questionable area. Mark. Mere change of opinion will not amount to reason to believe. You should have a new evidence. You should have found out something new. Or assessee should have hidden some information. In all these cases, I will accept. Assessee has not hidden any information. Assessee has provided you everything, but still you feel that day I was wrong, sir. Today morning I was sleeping under Bodhi Maram and I got this belief. Mere change of opinion cannot be treated as reason to believe. Okay. So reason to believe has to be documented, provided to the assessee, not to reason to suspect, just reason to believe. And mere gossip should not be reason to believe. Subsequent amendment to the law with a retrospective amendment is not reason to believe. Mere change of opinion is not reason to believe. If assessing officer has reason to believe that any income chargeable to tax, any assessment year line, 4 years or 6 years, and he may subject to issue of notice within the time limit, no time limit provision, given the internal management, tax rates prevailing on that date and completion of assessment. Assess first time, reassess again such income. Such income means the income for which notice has been issued. And any other income. During the process, I come across one other income which has escaped assessment. Such income or any other income, I can assess it. Okay. A quick look at case laws. Avanti's forma. Reason to believe is the main case laws. Held by the High Court, there was no tangible material before the assessing officer to hold that income has escaped assessment. The reason recorded for reopening constitutes a mere change of opinion. Therefore, reassessment is not valid. ICICI Primary Securities. Okay, after lapse of 4 years, AO reopened the assessment stating that on relooking at the accounts, it is identified that certain losses are of speculative nature, held by the apex court, Supreme Court, that assessee has disclosed all details in the return of income. He has given. There is no failure on the part of the assessee to disclose. Further, there is nothing new that has come up to you. Therefore, reopening is mere change of opinion. Hemant Traders is reopened solely on the ground that survey was carried on. Not on the basis of survey report. Survey was carried on at the business premises of Thursday, where nothing has been found therein which would indicate. Just because survey is conducted, can you reopen? Held by the High Court. There is absolutely no material. I told you there should be a proof. Otherwise, reopening is not possible. There is absolutely no material to indicate escape of assessment. Issuing on the basis that survey has taken place is not valid. Amarnath Agarwal, is quantification essential? Up to 1 lakh, 4 years. More than 1 lakh, 6 years. I am issuing after 4 years, but I am not quantifying the amount. Court said no. Yes, quantify it. Okay? Yes, quantify it. And then only I will consider that. Okay? Okay? Can the assessee objecting the reassessment notice issued under 148 directly approach the High Court in the normal course contending that such no, not possible. The High Court held that it will not be appropriate and proper in the facts of the present case to permit and allow the petitioner to bypass and forego the procedure of law. Okay, there is a methodology in which you have to appeal, and you cannot do it without that. Since the said procedure has been almost universally followed, you can. Okay. Subsequent amendment to law, I have already told you. At the time of filing the return is the proper, okay, held by the High Court. The position of the law on the date of issue of notice is not valid. Late that assessee done any mistake which has resulted in revenue loss should be seen. Where notice is issued on the basis of retrospective amendment of the law, then it could only amount to change of opinion and it is not sustainable. In Alana sense, they itself said even you cannot amend based upon a High Court or Supreme Court judgment. Because at the time of filing you are there proper, you cannot. Such income and any other income. This is also a very interesting case law in 4 cases. I issued a notice for one income and that became not taxable. But during the process, I find some other income escaping assessment. Assessee contended the purpose for which you have issued the notice is quashed. The purpose for which you issued the notice is not valid, so you cannot tax any other income also. In Ranbaxy case law, it was upheld by the court. When such notice, such income failed, any other income is also failed. But later, all the case laws, assessee favorable judgment, later Mehab Finfis, N. Govindarajulu, some other case laws also. Even though no addition is made on the original grounds, which form the basis of initiation of reassessment proceeding, AO is empowered to make additions on another ground for which notice might not have been issued. Further held, once the notice is found to be valid, then AO can do reassessment taking into account the other items also. This is interesting. Reassessment on the basis of findings of appellate authority. Tax evasion report was given to the assessing officer saying this assessee has evaded tax. That is done by investigation department, investigation wing of the income tax department. Income tax department has two wings. Administrative, I have given it. Administrative wing, investigation wing. The investigation wing has conducted some investigation and said, look, this assessee has evaded tax and submitted the information to our assessing officer of administrative. On that basis, assessment was reopened. Assessee contended, did you do it? This is mere hearsay, you are doing it. Gossips and rumors cannot form the basis, so the notice is invalid. The court said, no, this is not a hearsay. Even though assessing officer has not made it, but he has substantial evidence from the investigative wing that tax has been evaded. The issue under consideration is whether a notice for assessment issued under 148 on the basis of tax evasion report received from the investigation unit of the department can be treated as valid if such notice has been issued erroneously in the name of a erstwhile company. Okay. The Delhi High Court held that the notice issued under 148 on the basis of tax evasion report received from the investigative unit of the income tax department is valid, since there is a reason to believe that income has escaped assessment, even though this is contradicting the Maruti case law, but even though the notice was erroneously issued in the name of erstwhile company, which was being converted into LLP, a company converted to LLP. The court clarifies that it has passed no opinion on the merits of the case, which will be duly dealt with by the assessing officer. Okay, so this is 147 to 153. Okay, what is 147? Assessment. 148 notice. 149 time limit. 150 no time limit. 151 internal management. 152 rates of tax. 153 is time limit for completion of assessment. 1 minute. This is the question paper where we are here. I told you. A Limited entered into a scheme of amalgamation with X and Y transferor. The appointed the appointed date of the scheme. The scheme, which is also incorporated provisions of the returns beyond the stipulated time, were duly approved and sanctioned by NCLT, which was duly filed with the assessing officers. Messrs. A Limited, X Limited and Y Limited filed its original returns on 31st August, declaring the losses. Messrs. A Limited thereafter filed a revised return claiming loss for assessment year 16-17 based on the revised computation of X Limited. The assessing officer did not entertain the revised return, stating it is time barred. Dalmia Power case. Dalmia Power, the same, whatever is the fact, they made it as a question and gave. I'll come to this case law very soon. Okay. And another question also I found. The assessment of AK Limited for the assessment year was reopened under 148 and a notice requiring the assessee to file a return of income after recording reason on its internal order sheet that ineligible depreciation to the extent of 10 crores has been claimed. The assessee filed its return in response to the notice, and the authorized representative also filed a power of attorney in favor of to represent the company. The assessee sought reason for reopening the assessment, which was overlooked by the assessing officer, pretext that it is a procedural matter, and the reasons were known to the authorized representative. The AO completed the assessment confirming. As a tax consultant examiner, the assessee has the right to get reason to believe. Unless the reason to believe is correct, the whole process is going to be invalid. The whole process is going to be invalid. These are all the 2 questions that came in the examination itself. Trust me, all others has nothing to do with assessment procedures. Nothing to do with assessment procedures. All others, assessment procedure is 10 marks. Max 15. I don't feel 15 marks will come. 10 marks only it will come. And that too now I know case law and faceless assessment, because all others are going to go off. What is the point of asking it? Any of these case laws can come, because even under faceless assessment, case laws will be held valid. Okay, any of these case laws or other things can come. We are taking a break.